Last time I was with you, I posed the question, do technicals lead fundamentals? Because Pierre's theory is yes, they do. And I think he's right some of the time. A lot of the time, as you know, what goes on in markets is news driven. And so we had the thing last week where we were waiting for days for FOMC, then the news comes out, and then we're waiting for Powell to do his tap dance and tell us what he's thinking and answer which curveball questions he chooses to answer, and that can rock the markets. So what I was going to think to do this week is also the fundamental side of thing is the thing that most people seem to be weakest on. And a lot of the times they're scared of it. You know, as soon as you talk global macro, it's really scary. And I have been down the rabbit hole. And as with everything, I try to simplify things these days. I only use a few EMAs and support and resistance and fibs from a technical perspective. But I do combine it with fundamental knowledge as well. Now, on Monday, I posted a video and I was showing you the article from Marc to Market, Marc Chandler. And they was talking about there was the enthusiasm for the dollar because the dollar index had moved up. So then the thinking is, okay, we're going to buy the dollar this week. However, technically on Monday, I showed you that the dollar index had actually come up to a major area of resistance. And therefore, what I was saying is that it would be more pertinent, I think, on Monday would be to wait and see what would happen, because a better option for me to be buying the dollar and or selling anything else would be if the dollar index came back down here. Now, this is not a trade per se. I did this with a client yesterday, so we can take that off. But that is the area that we would be looking at. Come on, you thing. I don't want to play. This would be the area, the main area of interest when you look that you've had a move back up again, because we had a break of a trend line that went on here once again. And so that's a significant breakout pullback. So that's where you would be thinking to long the dollar. So what I was saying on Monday is just be careful thinking, okay, now the fundamentals and the technical break is saying we're going to go dollar long. I was saying on Monday, well, just hang on a minute. Let's wait and see what plays out, because this was a major previous area of resistance. A lot of the moves last week were overreactions to what was going on with the FOMC, etc. So what I was saying, the more cautious approach would be to wait for the dollar to pull back down and then get involved to buy the dollar or to sell the euro, etc. And on the basis of what happened next, from a fundamental perspective, well, I'll come back to that in a minute. Then other things, when you're trying to combine your fundamental knowledge with the technical. So I say, I've shown you this from Marc to Market. This was explaining after the weekend what's gone on. And this is a really good website for you to pay attention to and trade. I read these articles every weekend. I have a look at the calendar, what's coming up. I look at a few other sites for general news. But if you want a really detailed look from an expert in the field on different sectors, and if you don't trade, for example, the Asian market, then it doesn't matter. Just focus on the things that you are interested in. But this guy's got 20, 30 years of experience. I've got 20, from the fundamental side. I've got 20, 30 years experience from a technical and fundamental point of view. So the whole point of mentorship and for folks to learn is to pick our brains and or copy what we do and then come up with a solution for yourself. So it's not a big ask to spend probably 15 minutes on a weekend to read the summary of what this guy's working out, what's currently going on, and what he thinks is coming next and why. And that's the crucial part of all of this, is not to blindly follow somebody, but to understand where he's coming from, understand where I'm coming from, Pierre, Ashley, and all the rest of us, is where we are trying to work out what we think is going to happen next. Now, there are supposedly Nobel Prize winners who have proved mathematically that it is impossible to predict what is going to happen next in markets. And yet, I am spookily accurate when it comes to the entries and the planning of trades, because all I am doing is looking at repeatable patterns, as you know. Now, one of the next things that the gentleman talks, one of the things I always pay attention to is this dollar index, as we've looked at. But in the subsequent article, and this is from last night, this morning, he's explaining his update of, well, the dollar didn't really go anywhere yesterday because it consolidated, but particularly about the Japanese yen. Now, you know that for recent months, I've said to you, do not be in a rush to trade, and certainly do not be longing the Japanese yen anywhere around 150 because the Bank of Japan intervened because they do not want their currency to get any weaker. And this is a summary, in his opinion, of the three important things that are currently going on with the Japanese market. And he's also explaining that towards the end of the month, on the 29th of March, it will be the DOGE's CPI news, and most of Europe and US markets will be closed for Good Friday. So this Friday, do not trade the Japanese yen because it could be wild and completely random and go absolutely anywhere. But he's explaining here why that's probably going to be the effect. The other thing he talks about here, and remember, I always try to explain and show you guys to understand the big picture, how all of these financial markets are interconnected and how they influence each other. And if money is flowing into the dollar, then it is flowing out of this asset or that asset, and why. And so one of the things that he talks about here, and I've started paying more attention to this of late, is that the yen, dollar yen, appears to be correlated with the 10-year note. And if you, for a basic history of the Japanese yen, a lot of times the Japanese yen was referred to as one of the reserve currencies, one of the safe havens in the world. Anybody know why they claim that the Japanese yen was a safe haven and why it's not true? Anybody know why it really is a safe haven in monetary terms? Stick your answer in the chat box while I have a sip of my tea. So some safe havens, for example, the Swiss franc is a safe haven. And the reason why the Swiss franc is a safe haven is because of their privacy laws. And for years, I mean, the Nazis still had gold and things stored there for 50, 60 years. The Spanish government were found to have 30 odd billion tied up, hidden in Switzerland. And the Spanish king, the ex-Spanish king, he had 30, I don't know if it's million or billion stashed away in Swiss banks. So privacy and a solid, secure economy meant that folks wanted to put money into the Swiss franc, and therefore the Swiss franc is seen as a safe haven. However, the Swiss don't want your money. So as a result of which, the Swiss for years and years and years actually had a negative interest rate. So in other words, if you put money in a Swiss bank, instead of them paying you interest, they actually charged you for looking after it because they don't want your cash, because they don't want the Swiss franc to get too strong, because then it means that their exports are too expensive and they are a big net exporter. So then when you come on to Japan, did anybody answer the question? Ewan, because they have so many foreign investments. Exactly. So the reason why the yen, money flows into the yen, is dependent on the Japanese investors, because in Japan for years they've had their national debt is, I think it's 3 times their GDP. So the American debt at 34 trillion is 100% of 1 year's total production of their economy. So 100%. The UK is the same, Europe is similar. The Japanese, I think, is 3 times. They've had stagflation. They've had zero interest. They've just raised the interest rates last week. Woohoo! So the yen's going to get strong because they raised rates to 0.01%. And that seemed to be a positive. But what happens is, in times of crisis and panic, the Japanese would pull their money, their investors would pull their money back out of the USD and buy it back into yen, which would strengthen the yen. Now, what's going on at the moment, and what Marc Chandler's pointing out, is that the dollar yen appears to be highly correlated with the 10-year Treasury note. So here, the pattern for the 10-year note, the US bond here, is clearly down here. This was from October last year down to the end of the year, and now we've been in an up channel. And you could overlay the dollar yen over the top of it. It's the same pattern. So if the Americans are putting up and paying more interest on a bond, do you think that the Japanese are more likely to invest in it or not? What's the thinking? If you're sat, let's think you're in a bank trader in Japan, and you're trying to find the best value around the world to be able to park your fund's money, if the American interest rate on a 10-year bond is higher, are you more or less likely to put your money into the dollar? Absolutely, says Zoe. Yep. Ewan says more likely harder. So again, the big funds are sat on billions and billions of dollars and pounds and euros and yen. They are not able to take advantage like we are with FX trades and just pile in with our few thousand or our six-figure account or whatever, because we're just a drop in the ocean of the market. But for the big funds, if we want to get into a stock today and we want to pile into MicroStrategy, it's not going to make any impact. But for the fund, a fund trader or manager sat on 10 billion to start putting money into a stock will force the price of that asset to go up. So they end up being very conservative, and also they're bloody lazy, but they will put money into treasury bonds and they will then gain interest on it for basically doing very little. If the war kicks off in Russia, and the problem at the moment, as we know, is that the Americans were very quick to turn around and say it wasn't us, it was ISIS. The Russians immediately went for this was caused by the Ukrainians. And the Russians, as a result of which, have now significantly increased their bombing of Ukraine. We are potentially on the verge of a third world war in Europe at this moment in time. And if that was to happen, clearly that would impact. So where would the smart money, where would the big money, where would anybody with a half a brain want to put their money if, God forbid, the war in Ukraine gets worse and or the situation in the Middle East gets worse? Where would people rush to put their money when the panic hits and the real ultimate scare hits? Where are you going to put your money? Are you going to put it in the Japanese yen? No, no way. Yes, gold. Well done, Sonny. Hi, Sonny. Spoke to you the other day. Bitcoin is another option, as Nick says now as well. And yes, I mean, I actually sold all my gold the other day and silver, although I have kept all my gold and silver miners. And I can show you that in a minute why I did it. I am actually interested to buy back in, and I do have exposure to gold and silver indirectly because of the miners, and the leverage is better. And in fact, whilst we're here, I'll show now why I sold it the other day. Technically and fundamentally, gold, I got real near the top the other day. I sold at 2,200, and I'm hoping, I have an alarm set and I have an order at 2,120, I think it is. And I'm going to show you in a little while how you'll notice how spookily accurate this M2 of just looking at trend lines and fibs and 55 EMAs is on multiple markets. On crypto, it's absolutely nuts. I sat with one of the members the other day, and we had a look at crypto and went through at 61.8 fib and a trend line and a 55 EMA. I think 9 times out of 10 last week. Everything, when it dropped, that's where it was bouncing. So it was nuts. So gold, it may be that it goes without me. But if you recall, those of you who've been with us for years, I called buying of gold back in 23 at 1820. And I explained I'd emigrated from Spain back to Portugal. And I had to sell the gold prior to December. I then waited for 1820, which I shared with you. And I also bought again at 1820 again. And as of the other day, it was up 20%, which is great, but it's taken a year to get there. And my mining stocks, in the meantime, some of them are up a 50, 60%, and my crypto is up a shed load. So again, I am trying to use the same strategy for all different things, but it is all a mixture of fundamentals and technicals. And I'm going to show you today some things that you can look out for, that what's coming next and where I am thinking of putting my money next, and what I think is going to happen and why, based on news and on technicals. Right, so that's your 10-year note. Keep your eye on the 10-year note. You can find it on TradingView. It's a CBOE, 10-year Treasury note yield, and we've just had a look. So if the yield note was coming down here, then that might be a time for you to think about buying the dollar yen. So correlation, but the pattern on those two was extremely correlated. Now, the other thing that can go on with currencies is that the bank, they can either try to financially manipulate the market by injecting more yens into the marketplace. But the other thing that they can do is try to talk it down. So pay attention to the news, what's going on, and why this supports the idea of not getting involved in the dollar yen up at 150. And I've just mentioned as well, do not be involved in it for this coming Friday because of what's going on, as per the article right back there from Marc Chandler about the impact potential. I think it was the CPI. So every week, as we know, we look at the news, we look at the red flag news, we're trying to work out what's coming next. We've done our checklist. We've technically found trades that are really, really interesting. If we're going to trade the Aussie dollar, for example, then we wanted to take that trade on Sunday night, Monday morning, because taking it now, it is only 18 hours away, 12 hours away from major news. So if you're not in it already, then you would wait for the news to come out. There is some more Aussie news on Thursday. They've got it as not quite as important, but retail sales are important as well. So that makes it tricky. But the CAD this week, yes, we've got USD news, but big CAD news doesn't come out till Thursday. So I'm quite capable of able to trade this, willing to trade this up to possibly till New York mid-afternoon. So mid-afternoon London, I could be still in if I was to get in now, but I wouldn't want to ride the CAD GDP through the news at exactly in the tag, particularly whilst it's at the same time as the USD news. So back to the thing. Now, the big thing, you'll start to see this in all mainstream news and probably have done already. We have Bitcoin halving coming in 3 weeks' time. It's anticipated to be the 19th of March. Will anybody tell me what Bitcoin halving is, please? It is actually as easy as it would be a good quiz exam question for you, this when you was at school, because the clue's in the title. Similar to a stock split, says Brendan. Well, not exactly, Brendan, but what it is that new Bitcoin are mined on a daily basis. And so the miners at the moment, I can't remember the figure of how many are being mined per day, but in 3 weeks' time, so let's say, for math's sake, at the moment, a Bitcoin miner can mine, collectively, they are mining 100 new Bitcoin per day. In 3 weeks' time, the amount of tokens that can be issued today is going to halve from 100 to 50. So then you think about who is that going to impact on most dramatically, most quickly. Yep, Nick got it in that it was only half the Bitcoin can be mined. If Bitcoin if you can only mine half of what you're currently mining, Ashley's right. Clearly, the miners, the ones with all the supercomputers who are creating Bitcoin out of thin air, if I'm a Bitcoin miner and I'm making 10 a week and the current price is 70,000, which we came back up to yesterday, so my total gross income for the week is 700,000. Well, come the end of April, my 700,000 weekly sales is just going to drop to 350,000. So clearly that has a direct, immediate implication with miners. And I did have some very profitable trades with Bitcoin miners 2 months ago, which I've shared with you and certainly shared with the investing group. I have now stopped buying the miners because in 3 weeks' time, they're all going to be earning half as much money as they were now. So therefore, the potential reward from it ain't great. The other implication for all of this is that Bitcoin ultimately, somebody mentioned earlier, I think it was Nick, about Bitcoin being seen as a safe haven. And Bitcoin as a safe haven, similar to gold. And the advantage of Bitcoin over gold is that it is easier to move around. It is cheaper. You're not having to hire a truck. You're not having to pay sales tax on moving your gold. You're not having to pay extra insurance and have a safe installed in your house and have the risk of somebody banging on your door for it. You could store 10 billion on a pen drive. And because there is a limited supply ever of a maximum number of Bitcoin that can ever be made, created as per Satoshi's original plan, if there is a limited supply, unlike fiat, and more people are wanting to buy it, then there's only one way the price will go up. So the implications, everybody's now fussing about, oh, well, every time that we've had a Bitcoin halving, price has rocketed, and it has, but this is a very good article. We'll share these articles with you later. This shows you the impact of the halving And the first one in 2012, on the day of the halving, you could have bought a Bitcoin for $12. Where was foresight when we needed it? By the April, so this was November, December of 2012, I think it was, it then went to 229. So it was a significant jump. Then in 2016, had you been holding Bitcoin in the May time, June, July, was $649. The following year, it was at 19,000. But notice, for 6 months, it didn't go anywhere. And then those of you who were with me in May 2020, we started, actually, I think it was 2 or 3 days just before the Bitcoin halving that we actually started to run the beta group. And so the beta group joined me at the right time, and we paid 8,300, I think it was, for Bitcoin. And as it says here, Bitcoin then went from 8,500 on the 11th of May 2020 to over 40,000 by January of 2021. And it topped out at 63,000 in the April. However, it didn't go anywhere. So this was the Bitcoin chart. This was the 11th of May. And this was when price was at 8,500. You'll see until July, mind you, when I say it didn't go anywhere, it didn't go anywhere in crypto terms. In stocks terms, it was a blooming good move. But I mean, for crypto, this was pretty boring, because this only went up 20% over that period of time. And then those of you who joined me in the October, I did the webinar that you can still find in Mentor Pro on the 28th of October, which is here. And so by then we were up at 13. And in that webinar, I spoke about why I thought it was going to double and double again. And it actually doubled and doubled again. Well, it certainly doubled within 3 months. And within another 6 months, we had the first high up at 42,000. So we tripled at that point. And then the final ultimate high was the April. So that took a year to get to. So just be mindful of the hype. If you think you're going to dive in now, and I think as well, I seem to recall after the halvings, there generally is a bit of a slump as well as. So once again, you've got to have nerves of steel to be in this and to sit through it and the meandering around. But if you've got the conviction and the courage of your conviction, then you potentially can make a lot of money. This time could be different. Why could it possibly be different this time? And it's one of the most dangerous statements in stock markets when folks say this time is going to be different. Why could the halving be different this time? So Zoe and Nick and Ben say, and Justin as well. Hi, Justin. ETFs. So BlackRock and Vanguard got permission to create an ETF for Bitcoin in January. And as a result of which Bitcoin went on a run. So news, they've got it. Now suddenly you can bring in billions, possibly trillions of dollars from people who weren't initially interested in crypto. I mean, I've been invited out to lunch so many times in this last 10 days that people I haven't seen for ages. Hey, how are you doing? Yeah, great. Yeah, not spoken for a while. And I'm thinking after the third one, let's just get to the point about crypto. I told you 2020 and it is $8,000 and it was 10 grand and now they want to buy at 70. But the point was, you know that this is coming. The ETFs have changed the game. At the moment, this drop, and again, this is the emotion thing. This scared people the other week, but this was tiny. I mean, if you've been in Bitcoin before, this was only a pullback. It was only 17%. In recent pullbacks, we've had 30%, 35% pullbacks. So I have an order set at an alarm set at 60,000. I have enough Bitcoin, and I am actually going to sell some of my Ethereum and convert it into Bitcoin because I'm a bit concerned that the Ethereum is not going to get past. But again, here, from a point of view, technically, 61.8 fib, previous support and resistance in an uptrend. I would be a buyer of Bitcoin here. I personally will buy more if we get a crazy drop back down to 50. And again, it's this thing about buying, you're buying when there's blood in the streets. When everybody else is panicking, that is when you are trying to buy. On the subject of Bitcoin, I shared this the other week. This was Michael Saylor, 2021, explained what he was doing. he was borrowing money at less than 1% to buy an asset class that has averaged 171% over the previous 10 years. So I said here in my tweet, why other CEOs didn't cotton onto it. And again, I shared the other week, this guy's a double major from MIT. I think rocket science is actually one of his majors. So he's an ultra smart guy. But as he explains it in this little video, so check out the explanation there as to why he has pinned everything on Bitcoin in terms of both his company and himself personally. So I've shown you that. Now, another way to get involved, if you can't be bothered with all the wallets and the faff and the mess and all the nonsense that goes on with crypto, this is the ETF. So at the moment, there is no 55 EMA because this hasn't been going 55 days at the moment. It will be getting close. But that figure there, if you were thinking of buying the ETF, again, not financial advice, but that would have been a good place to buy the ETF the other day. And dependent where you are, you may well be able to buy that in tax-free. So in the UK, I'm not sure if you can at the moment. If you can, you might be able to put it in an ISA. In the US, you may be able to put it in an IRA. So check with your local accountants, etc. Another one is Coinbase. I explained this the other month. Coinbase, in effect, the CFTC have got rid of Binance, which was their biggest competitor. The BlackRock are transacting through Coinbase, and Coinbase are storing for them. And Coinbase have also released some other news the other day, which I shared with the investing group, and which means that one of the crazy coins potentially now is actually going to go mainstream and is actually on the way already as well, which is nuts. But Coinbase, so if I wasn't in Coinbase already, I would be a buyer at $200. I really need to move that up a little bit, the alarm. But again, anywhere in here, I would be a buyer of Coinbase because I do think that because of the crypto situation and the Bitcoin and the BlackRock, that it makes perfect sense to me. This is MicroStrategy, the other one, which I made a lot of money out. I shared with you in October. I was a buyer at 350. I used 5 times leverage, took out the initial stake, took out some profit, kept the balance, bought some more in here, cost averaging at 500. And then I actually took some profit. The other week when it was in here, I took profit at 1700 and I took profit at 1570. And then on the spike down, I bought again at 13. And I also have an order in still at 1150. So once again, I'm not going to buy up here. It's too expensive. I've already made a lot of money out of this. But now I want to still be involved. But now down here would be the better places for me. These are the miners. So the miners previously made a lot of money out of the miners on that move and made a lot of money the second time. And these were both 100% moves. And these were both M2 trades. And I got out the second time. Oh, this was the third time. So I did buy again here and I bought again here, cost averaging in. And then I didn't like it. I sent a telegram out to folks saying, look, I've gone right off this. And thank gosh I did because it dropped. And I'm not going to buy the miners again because of the halving, which we've just been through. AI is one I'm watching for somebody at the moment. Now, talking about news again then. So this came out the other day, which is nuts. Suddenly, Coinbase are going to launch a Doge futures. And I do own a lot of Doge, but I own a lot of Doge because I bought it at 0.001p and still bought some the other week. But it looks as though the crazy Dogecoin is going mainstream. And the quote here is from Coinbase that Dogecoin's enduring popularity and the active community support suggests that it has transcended its origins as a meme to become a staple of the crypto world, which is nuts. But then again, if you look at Doge's market cap at the minute, their market cap is 26 billion. And the transactions, the volume in the last 24 hours is $3 billion. And I don't know why it keeps doing it on here on TradingView. If you go into all, the price is not right at the minute. The correct price at the moment is 18 cents. But I say we bought this years ago at absolute pennies. And I did buy this the other week. And I bought it at, again, I shared it with the investing mob. Let's have a look. Doge. 61.8 fib, 55 EMA. I had a forward order in here at 13 the other week. I also had another order down here at 11, and the 11 one was because recent high in 78.6 fib. But this, when you get a minute, and find the time, but when you get a minute, have a look. How many of the tokens in the last 10 days did this? 61.8 fib, 55 EMA in an uptrend, and I think we also had a trend line with this as well. So trend line initially was there, trend line the next time, that is now the trend line for another move back down. But that happens all the time in crypto, and it also happens in stocks. The other thing with this new futures for Doge is they also talk about Litecoin, and they also talk about Bitcoin Cash. And these two have been accepted by the CFTC as not being a security for a long time, and therefore they are of interest. Now, Bitcoin Cash at the minute is too expensive for me. Its previous high was 1,600. I have orders in, I can't remember now. I think the best place I would like to get in is 320, but I do have orders going back again, looking at the setups I've just shown you. This is Bitcoin Cash. So Bitcoin Cash at the moment says at 485, all-time high is up here at 1,600. No, that's not right. I'm pretty sure 1,600 was the all-time high. What's coming next in the financial world? The big thing now is BlackRock the other day have come out, and they reckon this could be worth trillions in the future. Anybody know what RWA stands for? So Zoe was saying about the ETF, there should be sustained demand on Bitcoin, although BlackRock and Vanguard are masters at shaking up markets. So they will try to scare people into dropping the price of Bitcoin, create a panic, and then try to mop up cheap. So I still think it's going to be crazy markets. Anybody, any idea what an RWA is? Well, they reckon is going to be the next big thing in crypto. It stands for real world assets, and some examples of real world assets here. So this is Larry Fink. Larry Fink's been talking about this for a while, but the idea behind real world assets is that you can do everything tokenized on a blockchain, including property. Basically anything that you can do. So again, we will share this with you in the notes today, but this is, as I mentioned in the webinar in 2020, that you can still find inside Forex Mentor Pro. I explained there, it was more to do, in my opinion, with the blockchains, or equally as much to do with the blockchain technology as it was to do with the tokens. And I explained all of that in there, but this is the next step. So now we need to start looking at potential real world tokens and things that BlackRock are starting to do, because that, by the look of it, is going to be the next thing. And in terms of real world assets, you've got cash, commodities, equities, bonds, credit, artwork, and intellectual property, all of which could be tokenized and done through the blockchain and make things a lot easier, quicker, and cheaper. And if you're selling properties, exchanging properties, etc., it means you could cut lawyers out. So maybe being a lawyer is not going to be great in the future. Right. Any questions on any or all of that before we go over to Ashley? Ashley is going to go through some Earth and Sky with you. Pierre is away. Pierre's getting married. He's getting married on the 6th of April. So not next week, the week after. I think he's with us next week. And then he's going to be away. Zoe says, is Bitcoin Cash unconnected to Bitcoin? Bitcoin Cash is a fork, a hard fork from Bitcoin. And you find in the history of crypto, because these were all organized in groups, decentralized, with people having votes, they regularly fell out along the way. So they had what was called a hard fork. The issue with Bitcoin itself is that Bitcoin is no use in its current state, and probably never will be, in terms of cash payments. So if you were to go to the supermarket and pay with Bitcoin, you'd be stood there for hours waiting for the transaction to go through. So the way that it's handled now is that you have an intermediary. So if you have a Visa card or PayPal, they make the payment in fiat for you, and then behind the scenes, they are dealing with the transaction in Bitcoin. So one of the biggest drawbacks with Bitcoin itself is it is too slow. Bitcoin Cash, on the other hand, was created to speed up the process. So it does have a real world use, and it has been around for a long time, and it looks as though it is unlikely to be the target of the SEC, the nasty brigade. But it kind of lost favor and it drifted, and nobody really was paying any attention to it for a long time. But now, as I say, it suddenly, well, this could make it very interesting, because with this new situation with the futures, it could suddenly bring in a lot of volume. And like I say, with DOGE, it's not just the volume, it's kind of the credibility it's giving it now. I mean, it's DOGE started off as a joke, and yet now it has a 9 billion market cap. So this is the high back here, 1630. Oh, it was launched, it was even more after the launch. I couldn't remember that. So in 2018, it peaked at around 4.4. So in theory, then it could 10x technically back to where it was. Now, for me, with this, my thinking at the minute, I'd gone off, everybody had gone off this, nobody was paying attention, but now it's got $3 billion of volume in a day, crikey mo, and then it's clearly now serious again. But I wait for the EMAs to break. I then put on the weekly, and I got this little EA, I think Udo found this. So once we've broken the trend line, and you could put your trend line in here, and broken all this lot, I then fib it, and I start looking for recent low, recent high, again. And it could go, I could be going from this low here, or I might go from this low here. But clearly, these are the levels where you would be interested for a pullback. And I think in the end, I went to here because it consolidated. So remember, 61.8 fib, sorry, 55 EMA and 61.8 fib is a major area on most of these tokens when they do a pullback run. So ideally, I would be a buyer anywhere around 320 to 350 of this one. Technically, I'm kind of thinking, well, the recent high was 1600. So technically, it has the potential to make 350%. Crypto, yeah, it's quite reasonable. No, it's not excessive, but it's reasonable. Other areas on the way down, then okay, you might be looking to nibble in. As ever, not financial advice. It could go completely the other way, and everything could tank at any time. But personally, when you look at the BlackRocks and what they're doing and all the rest of it, we were waiting for the big boys to come in. Now that they're here, my conviction is even higher than it was. Right, Ashley, I've left you quarter of an hour this week.
No, I actually have a couple of questions.
Okay, go on.
Yep. Yeah, so first one is, my knowledge about Ethereum is that a lot of these other tokens, they have built on the Ethereum network, right?
Yeah.
So, this news about that Ethereum might not be approved for an ETF in the future. Will that, if Ethereum tanks, will that affect the other Ethereum tokens that are built on that network?
Probably, but there are various other blockchains that have over the years been labeled as Ethereum killers. One of the first ones was Cardano ADA, which is around 60 cents at the moment, and we bought that at 5 cents and it went to $3. Solana is another one. My thinking with this is that the recent high on Ethereum was just short of 5 grand, so it was at 4,800. My thinking with this is, and the more I've read about it, and I say I do have a private client who runs a family office in America and New York, and I talked with him the other week. The word on the street is the SEC are going to, there's various things have gone on in the background with Ethereum and the Ethereum Institute to suggest that it's centralized, and therefore there's somebody to go for, which is Vitalik, the founder. And they did something recently that the SEC kind of warned them not to do it, and they did it anyway. I can't remember the details of it. So my thinking at the moment is I am going, if we can get back up to 4 grand or possibly a bit more, I am going to sell half of my Ethereum, and I am going to either put it into Bitcoin and or USDC. USDC, I think, is the safer of the stable coins, because from a stable coin point of view, the SEC, USDT, Tether has a bit of a checkered history as well with shenanigans in the past, and that would be the one that SEC really should go for if they want to completely kill crypto. But yes, it's a valid point. So I'm thinking get up to 4.5, hopefully, sell half of it, keep half in case I'm wrong, because I was wrong about the Bitcoin ETF. I don't think they will kick Ethereum out completely. I think that they'll kick the can down the road. And I thought that with Bitcoin, but there are more reasons with Ethereum for that to happen. But then if Ethereum drops back down to 2 grand, I'll buy again. So that's my thinking. But yes, the whole caboodle could come down. And then inversely, that could be better for Bitcoin. My hope is that this is going to come up to 4.5. I sell. I hope then that Bitcoin is going to drop, and then I'm going to put a chunk of it into Bitcoin. And I'm also going to take some cash out, because that's the other thing is my exit plan now that I've also been sharing of late. You need to have an exit plan with this, because yes, I think Bitcoin will go to 100K quite easily. I think Saylor's claims of it going to half a million, quite reasonable. But equally, if I'm wrong, and at my time of life, I don't want to wait 10 years to be right, I need to take some profit. But yeah, it's a good question, Ashley. What was your other question?
Yeah, the other question is the Ethereum killer. And, we have Solana as being one of the next ones. Now, my question is, is a bit like the Ethereum thing. I took my profit. I sold one of my Ethereums when it got to a really good time, when near 3,900. And then the next thing, it dropped like 17% or something. Now it's pulling back, but I basically reinvested some of my profits into the smaller tokens. So I've been buying the smaller tokens, the ones that we have in your investing future. And my question is about Solana. Now, it is rising a lot in the past few days. The main thing is, the fear of missing out. And you don't want it to kind of also get too expensive when you're trying to buy it. And now it's at a point where it's like, I think, $200. So do you think we should buy, or do you think we should still wait for the pullback? That's my question.
Not financial advice, as ever. Not so much for you, but I wouldn't buy it where it is, because it's too expensive for me. But if you're convinced that it's going to keep going, then it's the FOMO, isn't it? It's, fear. But the thing is, if you recall what we did the other month with Investing Future, we bought Shibu we made 350% on Shibu. So what we did with that, let me use Binance because it's usually a longer history. So this is what I did with Shibu, guys. The first buy was down here, which was at 0.00000985. So I say, I've got a lot of this. I might have 1 million of these. But this was tied in with DOGE as well. But this thing shot up 360%. I took some profit at 28, by which point I think it doubled. And then I took more profit here and I put it into Bitcoin. So as you know, what we're doing with Your Investing Future is we're looking to make money on the smaller ones and then to put profits into Bitcoin and or the bigger ones, Solana. I wouldn't personally at the moment be putting any profit into Ethereum. I'm thinking to take profit out of Ethereum. And then the other day on SHIB, I said to folks I was a buyer again. I had a forward order in here at 25 that got filled. I also bought some more the other day at 28. And then DOGE, Shibu made 350%. DOGE only made 200, I think it was. 135%. But I took profit on the first part of it here when it doubled and took it and put it into Bitcoin. And again, I look at the technicals from, as you know, from previous all-time high as a clue to where this thing could go next. Shibu, I can't remember which Shibu, the previous all-time high was 750% higher than where it was now. So the previous all-time high on this was 0.000088. It's nuts. But if Doge can go mainstream, hey, what's to say that Shibu doesn't go mainstream? So to me, it's worth having a few quid in. And I'd say part of my reason, as you know, for keeping Doge for so long was because I think that when Elon Musk finally gets permission license with Twitter, I'm sure that he will use Dogecoin. I can feel it in my water. But again, Doge 61.8 pullback 55 EMA. That was a no-brainer, and that was the buy at 13 I had the other day, and I also have an order at 11. Right, we best get on to you.
Yeah, that makes
Is it next week you're away as well?
Yeah, next week I'm not there.
Yeah.
I'm going away
Okay.
in India.
Okay, so Zoe, if you want, you and I can meet up next week, and also if I don't know if the gentleman from Derby's in this morning. No, I'll have to contact you. But yeah, if you want to meet up, we'll meet next week. Shibu millionaire. Yep, I probably am a Shibu millionaire. Bonkers. Yep. So Ashley, if you could make sure you could do the Earth and Sky the following week when Pierre's getting married, that will be a big help.
Yeah,
please.
sure. Yeah, I'll be back on the weekend.
Okay. Righty-ho.
Yeah,
Can
share
you
my
share
screen.
screen? Anybody else has any other questions? Again, there's people came in late. I don't know why Zoom seems to do this. Hi, Jason, Justin, Kenneth, Stefan. Didn't see you in earlier. Sonny as well. Frank. Not sure if you were late or whether Zoom wouldn't let you in. Zinabu as well. Yeah, you weren't in earlier. Either a lot of you in the naughty corner or Zoom wouldn't let you in. Ewan, yeah, all the messages are going out on Telegram for crypto. Are you a member of YAF, aren't you, I think? So you should be getting them. I don't use Messenger. Morning from Brazil, says Stefan Stefanski. Morning to you, sir. Bom dia. I started trying to learn Portuguese in Brazilian, and then when I got to Portugal, they all laughed at me and my wife because we've been learning on Duolingo, and Brazilian Portuguese is different to Portuguese. Portuguese is speaking. Brazilian Portuguese is a lot nicer and easier. I digress. It took me 10 years to learn Spanish to a reasonable level, so I think my Portuguese never will get there. Right, youngster, share your screen. No, I stopped
It's telling
sharing.
me to stop share.
Yeah, okay.
Okay. Right.
Okay.
Can you
Yep,
see
we
my
can see.
screen?
We can
Okay,
see.
cool. Right, guys. So we have a lot of setups on Earth and Sky, but I've taken a few out as per the rules that I like trading with Earth and Sky, where I say, where the weekly pivot should be in the Earth and Sky zone and where the fib is. So we'll look at the ones we have here that I filtered out. And the first one is Euro Yen. And with Euro Yen, we are looking for a pullback into 163,680 and a 50 pip stop and a good potential for around 170 pips. So that one looks good. We had the USD Yen as well in there, but the reason why I've taken it out is because Marc has already mentioned it. It's already at an all-time high at 152. I think 800 is all-time high. So you don't really want to long it in the face of that. So that's why I've taken it out. Moving on to CAD Yen, we have a similar trade to the Euro Yen, and we are looking at 111, 170 area. Again, a 40 pip stop I think is enough, and 130 pip gain over that. So just be careful. I think on Wednesday you have the CAD GDP. So if you do get into that one, before that, make sure you have at least 24 hours to allow the trade to read, to do what it wants to do. And then you can manage the trade as well around that time. But I think Euro does not really have any news, but it's mostly the dollar news, so it could affect the Euro in a way. Pound New Zealand reacting at the weekly pivot at the moment. Let me remove this Zoom menu over here. Reacting there, so that would be your entry point around a 50 pip stop for a 100 pip gain. Potentially could move even higher. At the moment on TradingView, what I've done here is on here I just plot the support and resistance levels, and we've had a breakout here. Price is going up higher. I was looking to take a short here, but it just kept going up higher, so I avoided it. Now we're here, I ideally want a nice breakout candle. We've not had that. As you can see, the weekly candle has stopped right there. If we had it above high here, then that would have been nice. We could have followed it. Yesterday, the candle closed above it. So maybe that's a breakout. I'm not sure yet, but it does look good for a long. You're looking for around a 50 pip stop for a 100 pip gain there. Very similar to the Euro New Zealand, which I do like, because it has broken 180, which is a psychological level. So I am looking for the long on the pullback. So I've adjusted my order from last week because I didn't catch it. That was a pullback there, but I think my entry was somewhere here near the weekly pivot. So I've moved the entry now a little higher. So 179,550 that is. And my stop loss is there around 60 pips. And basically my target is 140. I think this is an M2 trade in a way as well. So I'm looking at 180 pips in the near the weekly resistance too. But I will take some off in here as well, which would be 130 pips. So keep an eye on that one as well. I like that one. And then dollar Swissy, very similar to the M2 trade we have here. I'm looking to take it 89, 170 with my stop loss just here. It's up to you if you want to put it below the 200 or just here below the 55. I've just kept the stop loss enough to allow enough breathing room. And I was also looking at this here as well. So I just need to adjust it slightly. But yeah, I could go below the weekly support there as well, which actually does make sense. So I might move that in here. Actually giving me a confirmation on two strategies over there, as you can see. And then over here, it's also below the weekly support. So I think that's a more safer stop loss. And I'm still making 1 to 2 on this one. So that makes sense. So we're waiting for a pullback on that one, which is still 100 pips away. And the last one I have is a New Zealand CAD, which did work last week for me for around 50 pips. It is on the M2 trade as well there, as you can see. Breakout. I took it down, the pullback. It did do around 90 pips last week. That was there, then it's basically pulling back up. So I needed to pull back there for around 54 pips left, but basically looking to take it back down there again, which is very similar to this, but the order is slightly higher. I prefer the M2 sometimes in terms of where I want my entries, but if you're looking for Earth and Sky, you're looking anywhere here. 82 would be your entry, stop loss around 30 pips there. The weekly pivot is in here, but you could be looking to take it back down a lot lower. So you'll be targeting that way again. All right, so 3 minutes there left. Any questions before we end the webinar? Otherwise, all over to you, Marc.
Okay, I did actually have a few Forex trades I was looking at. I forgot. So let me quickly go share screen again over there. I'm just going to whiz through these guys. So dollar index, this was why I was concerned about the dollar index. I say I don't particularly trade this per se, and if I did, I would have the stop in here. Couldn't move it earlier, but I was showing a student how to do it. But because the dollar index was looking as though it might reject there, then I was thinking about buying the euro and the pound a bit lower down. This is the gold and silver. It looks like it might be going to go without me. Notice loads of things are in channels at the minute. S&P 500, this is in a channel. Look like it could be a flag pattern as well. And then you've got Brent oil. This broke through the other week. That was because of the attack by the Ukrainians on the Russian petrol refinery plant. Thank you to Matt in Dubai who told me the implications of that. And I said at the time we needed a catalyst to get through there. Gold went without us, which supports Pierre's theory. Again, look at this with the NASDAQ. 55 EMA coming up behind the trend line. This is textbook. So if the NASDAQ was to drop and you were a buyer of it, you would be thinking 1770s, multiple reasons. I don't trade it, but that would be what it would be. Bitcoin I showed you earlier would be around 60K. Ethereum I also showed. Ripple came down and touched. Has now taught the SEC are trying to sue them $2 billion, which is nuts. It's a bit like Trump's $450 million fine. But again, 78.6 fib, 55, 200 EMA, did it all down there. CAD. So I'm interested along the CAD here, but there is Canadian news tomorrow. So if it doesn't fire long after New York opens, I've got one order here with the stop. The stop should be there actually, 40 odd pips below. Ideal entry, even after news, could be that one, because that will be 120 pips, which will be twice the average day's range. So if I cancel that one, I'd leave that one in, and I have the stop 30 pips away, and it has the potential 1 to 5 risk reward. Swissy, no. Euro, I actually bought the euro this morning. This, remember, the dollar index yesterday rejected there. That was where I should have bought it. But I bought it this morning, but that was more of a punt with a student. Pound. Conversely, we had a forward order into sell there. That's at the minute is slightly in profit. I wouldn't take that again now. AUD, no, too messy. Euro pound is finally getting near to where we've waited for months for this one. So the euro pound, I am interested to take that one. Am I in it or not? No, it's a limit order. So if it was to get up there today, that would be 30 pips, and that's the average range at the minute. Is insane. If it went on a run, I would actually be tempted up here to short as well. I think the others was some of the cross. Yeah, pound CAD. Quite like the look of that one. You're looking at a 65 pip stop, potential 300 gain. Aussie CAD, no. Dollar yen, don't get involved with the dollar yen. And even if Earth and Sky tells you to buy it up there, don't be buying up there, because the Bank of Japan you're fighting them, and they've deeper pockets than you and a printing press. Pound yen, look at the pound yen, 55. I don't trade it, hate this pair, but technically that is the area you would be looking. 189, 190, strong area for the pound yen. Pound Aussie is Ashley's favourite. Pound Swissy, somebody asked me to look at. Pound New Zealand, I think that's it. Right, we managed to do it all just in time. Oh, New Zealand CAD. I do like this one. New Zealand CAD, you are risking 45 for a potential 100 gain. Multiple reasons, broke down. We could have put the trend line on there as well as. So you have got everything and its dog going on there. You could be aggressive and just have the stop in here, but hey ho. But that, I do like the look of that one. Right, we did it all in 1 hour and 1 minute. Thank you so much for attending, one and all. I hope you got something out of this session. And again, the theme of this is understand both sides of the puzzle. Understand the fundamental and the technical, and keep your eye on what news is coming out to give you a clue as to where to focus next. And the big thing at the minute is RWA, real world assets. And I'm off to study it more myself this afternoon. You are welcome, Zoe. I will see you next week. I think we can't do Thursday next week. We'll have to touch base on that one. Eva, you and I'll send you the text, the link again. Thank you, one and all. Ashley will post the replay of this later today in the blog. Obrigado de nada. And Zinabu says thanks as well, as does Ben, as Justin and Zoe. Right, you're welcome, Daz. Catch you all later. Bye-bye.